Shri Gurubhyo Namaha. Welcome to our online teaching academy, Ekalaiva. Class 11, Accountancy. In this session, we are going to discuss about ledgers. Ledgers are the second step in the accounting process. That is, when we learnt journal, we were actually doing the first step of accounting process. That is, we were recording the transactions. And now, by posting those transactions into ledger, we actually are doing the second step of accounting process. That is classifying. Okay. So by posting ledgers, we are actually classifying the transactions into particular accounts. Okay. So now we'll see the definition of ledger. A ledger can be defined as a book which contains, in a summarized, classified form, a permanent record of all transactions. Okay. So ledger can be defined as a book that contains summarized, classified, a permanent record of all transactions. That is, for example, if you take all entries related to cash, okay, any transaction that is related to cash for a particular month, if you take, we are going to summarize all those transactions and we are going to classify the cash transactions separately. Okay, and this is going to be a permanent record of all the transactions which are made related to cash account. So when we classify like this, it will be very easy for us to identify and analyze what is the transaction for particular accounts. And it will be very useful in case of debtors and creditors, because debtors, we need to know how much should be the credit period and how much should be the credit extended to them based on the balances, isn't it? So we have to analyze by seeing this ledgers. And same way for the creditors also, how much is the credit we have availed from our creditors and how much is our credit repaying capacity. So all those things can be analyzed only when we prepare ledgers. It will be easy for us to analyze. Okay, so this is about ledger. Now we'll see sum number 1. The questions you can see on the screen. So these are the transactions given in question number 1, and we are going to journalize these transactions and then post the transactions into ledger. Okay, so first we'll start with a journal entry. Now as date is given, we'll have the date column. Yes, so now particulars, debit amount and credit amount. Okay, now the first entry is on 2020 April 1. That is, Mohit started business with rupees 50,000. So cash has come into the business. Okay, so cash account has to be debited, and to capital account, it has been brought inside for capital. Okay, so how much is the amount? It is 50,000. Now we'll just see the transactions and their journal entry alone. So on April 3rd, purchased goods from Rita. So Rita is our creditor and we are doing purchases. Okay, so purchases account debit to Rita, right? Amount is 20,000. Next on April 4th, we are paying cash to Rita. Our liability is decreasing, so decrease in liability has to be debited. To we pay by cash, so cash decrease has to be credited, 10,000. Okay, next on April 6th, goods sold to Rohit. So now here we are selling goods on credit to Rohit. So Rohit is becoming our debtor because of this transaction. So debit Rohit's account to, what is the reason for this debit? It is because of sales. Okay. Rupees 25,000. On April 8th, we are receiving cash from Rohit. Cash increase has to be debited to our debtor decrease. So Rohit account has to be credited 20,000. Right? Next is on April 12th. Again, we are purchasing goods from Rita. So purchases account debit to Rita. Okay, 12,000. Next, on April 18th, we pay cash to Rita. Same liability decrease has to be debited to, we pay by cash. So cash decrease has to be credited. Okay, goods purchase, cash paid to Rita, rupees 20,000. Right? Next, on April 25th, goods sold to Rohit. Once again, we are selling goods to Rohit on credit. So Rohit's account increases. So he has to be debited to sales account. Right? 10,000. Next, on April 30th, we received cash from Rohit. So cash increase has to be debited to Rohit. Debtor increase has to be credited 6,000. Now we are going to see how to post these transactions or journal entries into respective ledgers. Okay, so just see what is the first transaction. It is cash account debit to capital account. So what we have to do here is we have to open cash account and cash account and capital account. Okay. Now always this side will be debit and this side will be credit for any ledger we are preparing. Okay. And on debit side you will have date, particulars, then you will have journal folio, that is the page number of this uh, entry which is posted here. Okay. And then amount. Once again, this side also, credit side you will have date, particulars, then journal folio and amount. Right? So in the first transaction, we have debited cash account. Okay. We have debited cash account to capital account. Right? So same way here also, you have to debit the cash account on 2020 April 1, you have to debit cash account. But what is the purpose of this cash coming in? It is because this cash is brought in for capital. It has been brought in as capital. Okay. So just mention that to capital account. And just write how much is the amount. How much is the amount here? It is 50,000. Okay. So 50,000. Now coming to the same transaction, we have another account involved here, isn't it? So one account, cash account, we have posted the respective entry. Now we are going to open capital account and we are going to post this entry into the capital account. So here capital account is credited in this transaction. Okay. So what is done? Capital account is credited. So your entry will be on the credit side. right? And what is the reason for this? Cash has been brought in, but in what form it has been brought? It has been brought in the form of cash. Okay, so by cash account 50,000. Okay, same way for debit side we have date, particulars, then journal folio and rupees column. So in the first transaction, we have two accounts involved, cash account and capital account. We have debited cash account. Same way in the cash account also, we have debited the account, but we have stated the reason for the debit. Okay, the reason for the debit of cash account is it has been brought as capital. Now we have credited capital account in the journal entry. Same way, we have credited the capital account and we have stated the reason. Okay, capital account has been credited because capital has been brought in cash. Okay, so that is why it is by cash account. Now coming to the second transaction. On April 3rd, the entry is purchases account debit to Rita. Now these are the two accounts involved, purchases account and Rita. So who is Rita to us? She is our creditor. Okay, so one creditor account and purchases account are involved. Now we have to open two ledger accounts for that. Okay, open purchases account and Rita account. That is the creditor account. Okay, creditor's nature is liability. So the rule of liability is applicable here, right? Date, particulars, journal folio, amount. Then once again on the credit side, date, particulars, journal folio and amount. Same way here also we will have the column heads written, particulars, journal folio, amount, and for the credit side also date, particulars, journal folio, amount, right? So on April 3rd, we saw the entry, journal entry as purchases account debit to Rita. So purchases account has been debited. Okay, so come to the debit side, debit purchases account. And what is the reason? We have purchased from Rita. Okay, and how much is the amount? It is 20,000. So it means goods worth 20,000 has been purchased from Rita. That is what it conveys. Okay. And this transaction is on April 3rd. Right. On the same day, we also have an effect on Rita's account because the journal entry passed is purchases account debit to Rita, isn't it? So Rita account is credited in the journal. So what we have to do? So we should also credit Rita's account. And what is the reason for this credit? It is because we have purchased. Okay. So by purchases account rupees 20,000. Right. Now moving on to the third journal entry. Third journal entry, Rita debit to cash account. Rita account is debited because our liability has decreased as we have paid 10,000 cash. Okay, so what we have done to Rita's account here, we have debited Rita's account here. So come down once again to Rita's account and debit Rita's account. Okay, so on 2020 April 4, we have debited Rita's account because we have paid cash to Rita. How much we have paid? It is 10,000 rupees, right? And Rita debit is posted into the respective ledger now. We have credited cash account in our journal entry, isn't it? So just come to April 4th transaction, Rita debit to cash account. So cash account has been credited here. Come to cash account, come to the credit side. What is the reason for the credit of this cash account? Because we have paid Rita how much? Rupees 10,000. And when is the payment made? It is on 2020 April 4th. Okay. Yes. Now coming to the next transaction, April 6th. On April 6th, the journal entry passed as Rohit debit to sales account. No, now till now we have not opened any account for Rohit or for sales. Okay, so now we have to open Rohit account and sales account. Rohit is our debtor because we have sold goods to Rohit on credit. Okay, so open account for Rohit, who is our debtor. And open for sales. Okay. Now have the columns written on debit side, date, particulars, journal folio, amount. Same way for the credit side, date, particulars, journal folio, and amount. Okay. Yes. So now we'll go to the journal entry. On April 6th, Rohit debit to sales. Okay, Rohit's account is debited. So come down to Rohit's account and we will also debit it. Okay, on 2020 April 6th, we debit Rohit's account. Why? What is the reason? It is because we have made sales to Rohit. Okay, and how much is the amount of sales made? It is rupees 25,000. Now come to sales account. On the same day, we have credited sales account, isn't it? So come to sales account and we have credited sales account in the journal entry. So here also we'll have the posting on the credit side. And what is the reason for the credit of sales account? To whom we have sold? We have sold to Rohit. So in this way, we can just cross check what is the sales, whether it is a credit sale or it is a cash sale. Okay, suppose if cash sales has been made, we will mention by cash account. But here in this case, it is a credit sale. So we have written by the respective debtor's name, that is Rohit. Okay, now moving on to the next journal entry. On April 8th, we have received cash from Rohit. So cash account is debited and Rohit's account is credited because the debtor has increased. One asset has, one asset has decreased. Rohit's account is decreased and cash has increased. Okay, so cash account asset increase debited and Rohit debtor account asset account decrease is credited. So now we have two accounts involving here. The first comes the debit of cash account. So come to cash account and you also debit cash account. What is the reason for the debit? It is because we have received cash from Rohit. Okay. And how much is the cash received? It is 20,000. And this transaction is on April 8th. Okay, now come down to Rohit's account because the other account involved in this transaction is Rohit, and we have credited Rohit's account in the journal entry. Now same way on the credit side we have to mention that what is the reason for this credit, because he has paid cash. Okay, So that is the reason for this credit. Understood? Now come to the next transaction. On April 12th, we have purchased goods once again from Rita. So here purchases account is debited to Rita. Now come down to purchases account, as we have already opened purchases account. On the debit side, not third, the transaction is on April 12th. Okay, so April 12th, from whom we have purchased? We have purchased from Rita, right? And how much is the amount of purchase? It is 12,000. Now purchases account debit has been posted. What is the other account involved here? It is Rita's account. We have credited Rita's account. Now come down to Rita's account, and we are also going to post on the credit side by stating that this credit of Rita's account is because of the purchases made of worth 12,000 rupees. Okay. The next transaction is cash paid to Rita. So for cash paid to Rita, we have passed the journal entry as debit Rita's account to cash account. Now we have paid cash to Rita. Cash is going out of the business. That is why the asset decrease has been credited. Okay. So just mention that in the cash account. As we have opened cash account first, we will finish cash account, then go to Rita's account. Okay. So on April 18, we are going to credit cash account by stating that cash paid to Rita. How much is paid? It is 20,000 rupees. Okay. Now come down to Rita's account, and we have to credit. Yeah, we have come to Rita's account, and we are going to debit Rita's account because we have paid cash to Rita. Okay. So it is on April 18th. Why is that we are debiting it? Because we have paid cash to Rita. And how much is that we have paid? It is 20,000. Okay. Now coming to the next transaction on April 25th. Once again, we have sold goods to Rohit on credit. So we have debited Rohit's account to sales account. Come down to Rohit's account. So Rohit's account, once again, we are going to debit because we have made credit sales to Rohit on April 25th to sales. On the debit side, we write the reason. What is the reason for the debit? It is because we have made credit sales. And how much is the worth of sale? It is 10,000. Right? Now coming to sales account once again. Their sales account is credited. So here also the entry is on the credit side. April 25th. What is the reason for the entry? The sales made is actually a credit sale to Rohit. Okay, that's why it is mentioned Rohit account. How much is the goods sold? It is of worth rupees 10,000. Now come to the last transaction. On April 30th, we received cash from Rohit rupees 6,000. Okay, so cash account debit to Rohit account. So cash account is debited. First, we will mention the debit transaction. On April 30th, we received cash, isn't it, from Rohit. How much? It is rupees 6,000. And same way, we have credited Rohit's account because he has paid. So come here to credit side of Rohit's account. He has paid cash. How much is that he has paid? He has paid rupees 6,000. Okay. So this is how we have to just compare the transaction or the journal entry with the respective ledgers. Okay. So this is how we have to journalize the transactions and post it into the respective ledgers. Yes, children. So today we have learned what is a ledger and how to post ledger entries from journal. Okay. To receive the updates on our online lessons, please subscribe to our channel. Thank you.